An eye on. I want to talk currencies with Phil Streible. He's the Chief Market Strategist at Blue Line Futures. Phil, good to have you with us here. I mentioned the developments in terms of the latest out of the UK and Boris Johnson's resignation. What are you hearing?
Yeah, it's a combination of that, and then also I think China, they have announced a new infrastructure plan. That's what we were kind of preparing for. You know, they've been hit so hard with COVID. They're going to do 220 billion yuan. So that was kind of the bounce across the board on a lot of the commodities out there. We're also starting to see that dollar pull back. I was really surprised by the action where the dollar had that extension upwards because crude oil break-in takes down inflation expectations, takes down the the yields on the 10-year. Big range there, back down 280. Now we got a little bit of a bounce here, 293 on the 10-year yield. So I think the dollar is just taking a little bit of a breather at the moment. You're getting those foreign currencies, small boost with commodities.
Yeah, dollar up to 107 this week. Vertical move out of balance. It had been kind of consolidating around this 103 area. So this initiative, high conviction move up. We'll see if we can get some follow through. We're looking for higher highs and higher lows. But as you mentioned, slightly lower this morning, down by about 0.2%. A lot of trading day left here, though. And, you know, you mentioned the yields in terms of what we've been seeing as far as rates. And, you know, interestingly enough, the dollar's strong as rates have come off a bit. But what are you seeing in terms of the yield curve? It's now the third day that 210's inverted.
Yeah, it has been. It's going to continue to be very volatile. You know, you're going to see, I think over the long run, you'll start to see bonds will come down even more as we price more in this recession. You'll have the 10-year yield will catch up to that, and you're going to see this thing start to flatten back out again. So, you know, I'm very cautious on, you know, making any kind of big moves because of the volatility that's in the bonds in the MOVE index.
And it sounds like you expect that to continue, though.
Yeah, it will. I mean, look, you get economic data is going to continue to contract. I don't know how this jobs number is going to come out tomorrow. You go into these, this deflationary environment here coming out of inflation. That's going to create your most volatile trading market, and you'll get these short-term bounces like this. So if you were overextended over the last 3 days, you definitely want to use a bounce like this. You know, in markets like some of the grains, platinum, things like that. You know, use that to lighten up on an extension upwards. On oil, if you were at all bullish on it, you know, you got your opportunity back below 99, but I think you got to go farther out. Look at something like the December contract, which is in the mid-80s. You
know, in terms of slowing that demand a little bit, the Fed basically recognized it in the minutes. They said the possibility is there that this restrictive stance could be, they would elevate this restrictive stance if they needed to, but they also talked about how it could slow the pace of economic growth. But their focus here, again, that return to 2% inflation is critical to achieving maximum employment on a sustained basis. You know, speaking of overextended, I mean, we've seen the dollar to the upside here, but you've got currencies which have been coming under pressure. I mean, you mentioned China and the news there this morning or overnight, but Japan, we've seen some of the numbers, COVID concerns, Tokyo. Numbers have been spiking there. We've seen the Japanese yen just on this trajectory to the downside, kind of slowing some of the last couple days, but, you know, not really what many expected to see considering some of the weakness in the indices, but certainly feeding into some of the strength we've seen in the U.S. dollar.
You know, when you go with the yen, I mean, they've been the most supportive, most accommodative. Mm-hmm. They refuse to acknowledge, you know, any kind of tightening whatsoever. Now that market has been consolidating here. So if I was going to play it to the upside, play a rebound in the yen, you'd have to do it definitely with some call options. But any kind of bounce up, you're going to want to remain short. A lot of the foreign currencies, you know, people ask me, like, why are these commodities crashing and things like that? I tell them the dollar index is at a 20-year high. I mean, 2003 was the highest we've been at this level. A lot of foreign currencies, they're at 20-year lows. So that's going to dramatically impact everything, supply, demand, balance of trade. You know, so, you know, I think that this market, you just continue to be a little bit cautious, lighten up on any kind of bounces, you know, and look at this year. There's still a lot of time left.
Talk to me a little bit about the 6E. I mean, you're talking about if you want to, play the yen, you've got to buy calls. I'd imagine a similar situation there. I mean, the price activity has been on that same trajectory.
Yeah, the Swiss franc, it really rolled over. I mean, it formed a perfect double bottom. We came back down. If we get another retest of those lows, we'll play that back to the upside. But we want to see like a rebound in a lot of different markets here. You know, I just, like I said, very cautious on all these markets right now.
Phil, last week you expressed some caution in terms of the indices. Tom White said that you were feeling like we could see some more downside momentum there, some pressure to continue. Are you still kind of in that camp?
Absolutely. I mean, if you get a move on the NASDAQ up to 12,000, you definitely want to be selling that, playing it on the downside. S&P 500 closer to 3,900, and on the Russell 1775. You want to be short on all those. You know, the one thing though, I got to be a little bit cautious on the NASDAQ is if you go into the deflation trade, they take yields, come back down, and don't start to lift off. You're going to have people, they're going to start buying the NASDAQ, and what they'll do is they'll sell the Dow because of all the energy supported stocks that are in there. And you're going to see, you know, this rotation back into the NASDAQ. I think we saw a little bit of that earlier in the week, especially when yields were down at 2.8. But, you know, I think focus on the NASDAQ, focus on the Russell on the short side.
Is that dependent, though, on yields coming off at this point?
Yeah, 100%. That's what's dependent on. That's what is going to actually lift the NASDAQ up. Yeah. But, you know, these stocks, many of the stocks in there, they're down over 50%. And then most of the NASDAQ.
I guess the question,
you know, go ahead.
Well, I was going to say, I guess the question there is it sustainable then to the upside? I mean, because the idea being that yields are coming off here because the economy is not necessarily a good thing, I guess is the thought.
Yeah, you're going to get a bear market bounce on that. So, and they're very violent because of the fact that the volatility is so high at the moment. So again, you get that big bounce, don't chase it, short it into the rallies here. I don't know if we're necessarily going to make new lows anytime this week or, you know, coming in a jobs number, but I think over the course of the summer and into the fall, you'll start to see that weaker data, weaker equities as well.
Phil, it seems like we've covered most of the more heavily participated or traded products. The one thing that I wanted to get your thoughts on before we let you get out of here is where does this leave Bitcoin right now? It's been kind of holding around this 20,000 level. I keep feeling like it's going to open up the door to the downside at some point. Your thoughts on cryptos?
Yeah, I'm not a bull on cryptos at all. I actually don't like, you know, Bitcoin, Ethereum. So on any kind of rally, I think you still want to be selling that product. I mean, I just don't see it. It works as a highly leveraged tech stock. So, you know, you get a bounce 23,000, you want to be shorting it there. You want to cover it right around 17,000.
Okay. In addition to the NASDAQ around 12,000, we'll keep an eye on those levels. Phil, appreciate you joining us here. A good breakdown, taking a look at what's playing out in terms of the overnight, some headlines and some markets to keep an eye on. Phil Streible, Chief Market Strategist at Blue Line Futures. A quick